Today we're going to be talking about magnifying your strengths. Stay tuned, traders. We'll be right back.
Again, just a reminder, Thursday, August 6th, 1930 Australian Eastern Standard Time. That's 9:30 GMT. I guess that's, for me, 5:30 p.m. Australian Western Standard Time. Pepperstone will be hosting, Chris Weston from Pepperstone will be hosting myself and Mr. Peter Anderson, who's a very experienced trader, running a lot of EAs. It's going to be, I think, a very informative evening for people to tune into. There are a few spots left. So again, just down in the description box, I've included a link for those traders who are still interested. I've had a lot of people email me saying they had problems logging in. They weren't able to get a spot. I think there are a few spots left. So if you're able to get in and get your spot now, it'll probably run approximately about an hour. Peter's from Sydney. And again, he's got extensive experience with expert advisors and systematic strategies. And Peter's been trading for a long time. And again, I'm just looking forward to hearing and chatting with Peter. He's a wealth of knowledge, very experienced trader. And that'll be Thursday. So again, Chris Weston from Pepperstone will be covering some of the other analytics and technicals from global markets, and I'm really looking forward to it, and also looking forward to sharing as much between myself and Peter and Chris. So again, there are a few spots left. Make sure you lock in your spot. Thursday for North American traders, and in the UK that'll be Thursday morning, and Australian Western Standard Time Thursday afternoon, and for those of you in the East, 1930 Australian Eastern Standard Time. Click the link inside the description box, and you can save your spot for the
G'day traders, I'm Stacey Burke from Stacey Burke Trading. It's Monday morning, the markets are open. Stormy, rainy Monday in Perth. Today we're going to be talking about magnifying your strengths. So over the weekend I received quite a few emails and answered a lot of questions, and still trying to work through a lot of questions and comments. And I want to say first and foremost, thank you for a tremendous amount of quality input, a lot of great questions, a lot of great feedback, also just a lot of positive feedback from people who have made some significant progress in their trading. And today we're going to talk about a couple of things in terms of magnifying your strengths. I've also had some other people who have commented that I talk about the same thing every single day, and I'm going to just clarify that. I will continue to talk about the same thing every single day because that is what I do. I'll be the first person to admit I'm not trying to trade every move in the market. I have a diploma in technical analysis from over 20 years of studying the market. I got that diploma, I think, almost 20 years ago. And I am well aware that there are tons of different ways to trade. There are trades all day long in the markets. And I have said this right from the start. My objective is not to try and trade every move in the market. For me, my personality, my consistency, all of those things were inconsistent because I tried to do that based on what I was trying to achieve very quickly and very fast. And for me, that led to a lot of mistakes, a lot of self-sabotaging behaviors, and also some realizations that even though I was pursuing a certain objective, the way I was going about that was actually not going to get me there. It was going to get me lots of pips, lots of great trades, but nothing that was scalable consistently, nothing that was going to be able to be duplicatable in terms of my emotional orientation to the market. And so therefore, very important that I had to identify what my strengths were, what my weaknesses were, and then look at magnifying my strengths. So just to reiterate, one of the things I constantly focus on is not taking 10 times the amount of trades at one size. My focus is to increase my scalable trades, my ideal trade setups, and trade those with 10 times the size. And through that process and learning, there was a lot of painful mistakes and painful learning, but most of those mistakes and most of that learning came from knowing what my own self-sabotaging behaviors were, and then having the realization that the trading side of it itself, okay, the actual mechanical, technical execution side of trading itself is not that complicated when you understand what your strengths are and how to peel that onion back and be confident that you can execute the strategy. Then it's understanding that most of the damage that will come in trading is not from the market side of things, it's from the individual side of things. A lot of traders, you know, that's what attracts them to using algorithms, EAs, you know, computerized trading models, and again, with those there are challenges as well. But for me, myself, I'm a discretionary retail trader. I'm happy with that, but I had to identify where my weaknesses were, and the whole simple 12 candle rule process that I go through each and every day was designed at eliminating me out of the potential to make mistakes, and then making sure that I actually stuck to that process. So it's one thing to have a process, but if you can't stick to it, it doesn't matter what your results are, it doesn't matter what your system produces, it doesn't matter any of that, because if you're inconsistent, you can take the best trading system in the world and you'll still run it into the ground and blow your account up. So just coming back to some basic things. Friday, Monday, Tuesday, Monday, Tuesday, Wednesday. Monday, Tuesday, in large percentage of cases, will set the high and low for the week. And in those sessions where those highs and lows are set, we'll often get a high of the week setup or a low of the week setup in the London, sometimes Asia, but usually in the London session. That initial balance helps me identify a bias as the week evolves for trading potentially in that direction, unless we start to obviously work one side for the reversal, Thursday, Friday, that sort of scenario, which we've talked about, or if we're in a trending market where the market may continue to push in one direction, as we saw last week in the British pound crosses, some absolutely huge moves. My edge, the system that I go through, the 12 candle window, that's the edge that I identify with. I'm looking for a couple of setups: buy low, low of the day setups, sell high, high of the day setups, or trend trade setups where there's a breakout, pullback, continuation. I talk about the timings. I talk about being very specific in that equity opening hour, especially when I'm at the low of the day or the high of the day. And then we talk about looking at these 25 and 50 pip pullbacks into trends or into peak formations for reversals, because when the market moves that 50 pips and goes into consolidation, sometimes it's 25 in a strong trend. But for me, it was about learning and studying all those patterns and understanding when I go to the screen when Asia's traded that I can identify if there's a peak formation already in place that potentially may stay there for the day, for the session, or if we're in the middle and London may be getting ready to lock in a low or a high, or if London itself is actually in the middle of the move and the US session may give the low and the high when there's a reversal or a peak formation. Engulfments and pin hammers, I've had some excellent questions. If you're not sure what they are, look at your charts and identify the highs and lows. Those typically will be engulfments with pin hammers in those peak formations. So again, for me, it's about magnifying my strengths. I'm not looking to try and trade all the moves in the market. I read another comment, somebody said, if I see the high or the low in the gap time, I'll trade that. That's perfectly fine. I'm talking about me not sitting at the screen 12 hours a day. I'm talking about targeting high priority times when I know in a large percentage of cases that there's going to be either a stop hunt to the high or to the low, or they've already locked in the high or the low, and I'm going to be in a trend trade in that next 12 candle window. If you've gotten a better fill, or if there's already been a trade entry, that just confirms the direction that I'll be trading in that session, if indeed I am even trading that session. I may have already been in a trade in London, and I've trained myself in a large majority of the time to, once I've locked in my trade for the session or for the day, to take that and maybe walk away and not be worried about coming back the next session. There's been some ideal conditions, so it's tempting to still want to squeeze more out of a winner or to hold on longer, all those things, which again, another great question. A trader mentioned he has been targeting certain different profit levels, still missing out on larger trades, that sort of scenario. And I'm going to suggest that, you make decisions in live time, you learn from every single trade. The market gives what it gives. You might get 50 pips, the market goes 100. Could you have gotten more? Absolutely. But you made a decision on the day, you locked it in. Congratulate yourself, but then look at that trade and assess it. How could you have maybe traded it longer or harder? What were the indications deconstructing that trade that maybe would have given you that idea that that market potentially was going to extend out another 50 pips? All those little things. But I never beat myself up anymore about making a decision in live time. You execute your process, you make a plan, you execute it, you lock in profits, you manage your risk, all those things. Can you trade them better? Yes, I'm sure you could. There's going to be trades that you do perfectly well. They do exactly what you said they would, or you thought they would, and you walk away and that's it. And there's going to be days when you hold on for more and don't get as much, and all those little scenarios. You make decisions in live time, you live with that, and you go on to the next trade. Trend trades, stop hunts. You might be in a trend trade, you might be in a situation where they work the high, lock it in, and it's a 50 pip stop hunt that's over in 4 candles. So, I have some different scenarios that I look for, but my system and my approach is very simple. I'm not worried about catching every move. I don't care what other traders are doing. I used to get caught up into that. How come they're getting more pips or they're trading bigger? You're gonna hear that over and over and over again. And that's what comparison will often interfere with your progress because you're focused on other things. That's great for those traders. I'm only concerned about, am I moving in the direction of constant progress? Am I getting improvements every week? Am I trading better? Am I trading the right trade setups? Am I deviating and being caught into chasing stuff, or chasing poor quality setups and not waiting for my ideal best trading setups? So these are all the things that you learn about yourself through patience, observation, and awareness, studying the market, all those things. So my 12 candle system, which I've pieced together from lots of different traders, lots of gold nuggets over the years, trading, learning, making mistakes, making some painful mistakes, filtering things down to the simplest process, to the highest probability trade setups that I identify with, and then trading those. Engulfments, pin hammers, low of the day, high of the day, equity hour opening times, measured moves, 50 or more pips, 1 bar stops. It's pretty simple. But you know what? Funny thing is, it's easy to do and it's easy not to do. So these comments that sometimes, traders say that you missed this or you didn't see that, it's okay. I'm not worried about that. If you want to trade every move, that's up to you. And that's perfectly fine. For me, my personality, the way that I see the markets, the way I view the markets, my beliefs in the markets, my tolerance for risk, all those things are built into this system. My objectives are to keep trading those simple trade setups bigger and bigger and bigger, and monitoring as I go along. Is there anything different? Do I need to improve on something else? Do I need to dial back size? Am I anxious when I bump up size? Am I still able to execute well? Am I calm? Am I able to process that information and be an observer of my performance while I'm trading it? So these are all the things that only every individual trader can monitor. So when somebody, wants to, know what the expectancy is or the results are, it's completely irrelevant, because no matter what, every trader is going to trade this different. They're going to put their own thumbprint on their system. These are just the nuggets that I've pieced together that work for me. You can take bits and pieces and make it your own, because you need to magnify your strengths. Some people are quite comfortable trading multiple trades at one time. Again, my objective is not to have a bunch of trades running. I recognize that I'm going to pick a pair sometimes that's going to struggle to move its 50 pips. It's going to get there, whereas another pair may be 50 pips and 4 bars. And I get that all the time. But what I want to know is that when I identify the trade setup and I execute it properly, Did the trade evolve and play out as I expected it would? It may not have done it as fast as another pair, or it may not have gone as far as another pair, but I made a decision in live time based on how I processed that information. I executed to the best of my ability, review, assess, and improve. That's what's going to keep you moving in that direction. So all these other things that are out there, all these other great results, and the Lamborghinis and the Instagrams and the YouTube channels, all these other things, perfect. But I'm telling you what's happening every single day in live time for what I'm doing, and I'm doing the same thing every day. So another comment I got was, you talk about the same thing every day. Absolutely. And I'm going to continue because that's what I do. I don't tell you one thing and then go do something else. I trade this every single day. Yes, there are some other trades that I'll take, but this is the main system that I'm going to be trading every single day at the timings, at the high and the low of the day, engulfments, pin hammers, trend trades, stop hunts. That's my trades. So again, I'm just sharing that with everybody because these are the simple steps that I use. I'm going to see some other things evolve, but the template every week, we're going to be an up template, we're going to be in a down template, we're going to be in a range bound template, we're going to be in a trading range where they end up working the low in 3 pushes or they work the high in 3 pushes. There's not going to be anything new. There's going to be a high of the day, a low of the day. There's going to be yesterday's high, yesterday's low. There's going to be the Asian session, the London session, and the New York session. It's going to be there today, tomorrow, next week. It's going to be in gold, oil, and currencies. It's going to be in equities. There's going to be the same scenarios. There's going to be smart money, big money, and the retail trader. It's going to be us against them. It's the same stuff. So, just coming back, my objectives, these are my objectives, is not to trade every move and try to scalp and show the market how much I know about how it moves. I'm not interested in that. I'm interested in targeting high probability setups that I've built out of my playbook that show up again and again and again, that I can scale up in size and target those moves that are squeezes, stop hunts, trend trades, whatever we want to call them, but I want to be able to position myself with a 1-bar stop and have 3, 5, 10 times potential targets in those trading setups. I know what my sabotaging behaviors were and are. I know what I need to do to avoid those. I know what I need to do to magnify my strengths. I'm patient. I've learned this the hard way. And I set 30-day goals constantly. I'm always working on one thing for 30 days, one thing. And I learned that from Mike Bellafiore from SMB Capital. I keep focusing on one thing. If you focus on one thing for 30 days at a time, that's 12 things you can improve over the course of a year. And that's, again, constant progress. And these are all things that are easy to do and easy not to do. So when there's all kinds of garbage out there going left, right, and center. There's tons of stuff on the internet now. We know there's all these theories and ideas. What I'm concerned about is, what am I going to do every single day that's duplicatable, that I can reproduce, that's based on how the market behaves, and get better results, get bigger, and keep improving that and scaling it up in size. We're going to look at some of the best chart setups from last week, again, that fit the criteria. I know we're going to have some huge moves this week. It's the beginning of the month. It's the beginning of the week. So we are potentially in line for some huge moves this week. We have payrolls at the end of the week, the BOE. Traders, keep getting better. Thank you again for a tremendous amount of feedback, awesome questions. And again, I apologize for any delay, but I'm just trying to work through and address all of that. And keep it simple, traders. Keep it simple. Keep getting better. Scale it up in size. Have a great trading week. Make sure you don't miss the webinar. Save your spot. Peter Anderson from Sydney, very successful trader. Again, I'm just looking forward to learning from Peter as well and sharing my experience and what I do, which most of you who follow me, it's going to be very similar. So have a great trading session and a great week, and may the markets go with you.
Looking at some of the best trade setups from the previous week and heading into the beginning of the week, looking at the pound New Zealand from Friday, we had our previous day's high. We had the low of the day from the session, which was from London, of course. As we head into the next day, the market gave us a low of the day formation prior to heading into Asia that potentially may have held. The market went up at the beginning of the 12 candle window and took out the swing high for an open drive. One push, two pushes against the move to continue up to the end of the 12 candle window, at which point we saw a potential peak formation in place and then a 3-bar engulfment. As we headed into the gap time, then the market worked down in one push, two pushes, and then 1, 2, 3, 4 candles to end the first hour at the low of the day, and then an engulfment pin hammer. So we have an engulfment candle, bull candle. We have some small pins formed, but then we have also a pin and a bull candle engulfment, which I term a pin hammer. Any candle with a pin on the bottom and a smaller body, I view that as a pin hammer. But that's the first candle of the London hour. Then we have the lower high, which I call a middle structure. That gives us geometry for potential of measured move, but also once this level is broken, we have an area that the market can target through. Now we can move our position to break even. But we also have a structure that we can measure for a measured move, which again, just, I don't use Fibonacci's. I know people use them. I don't typically identify with any of that stuff. I use 100% expansions of geometry and the number levels. So in a simple situation, we could look at this and say this is basically a 50 pip box. So we're looking at 2 times that on top, which is 150 from this level. And the market reached that full expansion. A full expansion of this range itself was reached. Or in some cases, we have a larger geometry. That market could potentially still be going to that second full expansion at 98.50. Currently, we are sideways after a breakout and a pullback on top of Thursday's high. Depending on how this market trades as we head into the Europe-London Open, we may see a peak formation put in place, because currently this Asian range is in a sideways consolidation inside of the peak formations from Friday's high in the U.S. session and Friday's low in the U.S. session. So again, I do not view this as a peak formation. When I see this sort of consolidation sideways, I would look for potentially a low of the day or a high of the day setup, possibly in London. If the market in London stays trading inside of that consolidation, then of course we could look for 3 pushes to a high or to a low in the U.S. session for a reversal or continuation of that move. But coming back to the original point, this is a pin hammer in the middle hour, first candle of the equities hour, on a third push to the low of the day, on top of the W formation that formed in the rollover. This is a 50 pip stop hunt down, 25 to 50 pips. This is actually 75. Therefore, targeting not only the high of the day, measured move of the smaller geometry, but potentially the measured move of the high to low. We have a high of the day and a low of the day that formed in the London session. The high of the day formed at the end of the 12 candle window off of round numbers. The low of the day formation with the pin hammer at the London Open formed at the quarter level, again round numbers, below the 00 box, and that market moved up 150 pips. Again, looking at the pound New Zealand from Wednesday heading into Thursday's session. Previous day's high. So structure, we talked about this in another video, but we just reviewing again some of the best trading setups. Looking at Asia, looking at the consolidation in a 25 pip box. We've pulled back 50 pips from the high. The market's gone into consolidation. As we head into the Asian session, we get an engulfment in the equities hour of Asia, potentially giving us a peak formation low. Takes out the not only the high of the day, but the high of the swing high in the consolidation. stayed on top of that before taking out the previous day's high, pulling back, breaking out again, and then pulling back 1, 2, 3, 1, 2, 3 into the trend, an engulfment on the second candle of the first hour, which in combination is a bullpen hammer at the low on the 1, 2, 3 down, an open drive candle on the last candle of the hour. And if you look again at these 4 candles that form the first hour of Europe, that forms a pin bar, bull pin bar, open to close. It's an open drive candle. The first candle of the second hour is a open drive candle through 50, which again is our first candle of the second hour. That's just picturing this in an hourly sense. We have a peak formation low in place. We have geometry now for a measured move. And in our equities hour, we have follow through in the next hour with an open drive candle, bull candle through the numbers. So this hour was a bull candle. This next hour has opened on a breakout bull candle with the trend after our bullpen hammer in the first hour. We expect a second hour minimum of continuation. But we are also targeting now geometry for the measured move, and this market continued strongly. It behaved exactly as it was supposed to. And the fourth candle would have thrown traders to potentially get scared out of a winning position. This would also get traders shorting this early before waiting for any confirmation. Seeing the pins, they think they can short this. The market continues and engulfs the last candle of the second hour. Consolidates at the high at round numbers before continuing that move for another 75, actually 100 pips up, fulfilling not only our measured move structure, but continuing that trend into the US 12 candle window. An example, a very strong market, but an example of a continuation trend trade into the next session. Just looking at the British pound now on Friday. Again, a very strong market last week. In the very first 3 hours of the day, the market took out the previous day's high and continued that move in the equities hour of the Asian 12 candle window. Put a new peak formation in place. So again, the first candle of the second hour, the equities open, continued that move into the high of the day before being engulfed at the end of that 12 candle window. The market works into the low, gets traders chasing the W formation into the Europe 12 candle window before hitting it a third time. 3 pushes down, 1 push, 2 push, 3 push. We're at the high of the week. Then we get 1 push, 2 push, 3 pushes, sideways, pins underneath, the high bull candle gets engulfed. And again, we talked about trap volume. All of this volume above that quarter level is trapped. The market hits the lows. We'll just actually open that up a bit more to show traders all this bullish volume from Asia, and the gap time as well as the Europe London Open is caught above that quarter level, and then bang, they hit the stops. They pull back, they hit it a second time and engulf the lower pin. 1 push, 2 pushes, and then a 1, 2, 3 into the US equities open. Hit it a second time, and then 1, 2, 3. At the end of our 3-hour window, we get an engulfment. Then the second mouse chasing the long move. Indicators, trend traders, trend followers, whatever we want to call them, would be following that swing, thinking this is going to continue. The first break of that trend line is our trend line break. For people who understand, we'll always get a retest, trend line break and retest of the high. This is our first warning sign that we're setting up for a possible reversal. Middle structure on that last leg, and the market, of course, bang, bang, hits the stops for a 50 pip move down over in 2 candles. This is a high of the week style of setup. 1 push in Asia, 2 pushes in London, and then 1 push, 2 push, 3 pushes in the US. Small bull candle at the high, engulfment, a retest, and then the fast move to the downside. So potentially we may have a high of the week peak formation in place. As we talked about, Monday, Tuesday will often form in a large percentage of cases a higher low for the week. And we may see a Friday, Monday, Tuesday low formation pull back into the trend, and then possibly a continuation back up towards the high maybe on Wednesday, Thursday. But currently we're underneath of the distribution pattern up top. And again, the market has gone into a 25 pip consolidation. We're underneath the peak formations from Friday. We may see some retests of U.S. session lows from Thursday and Friday session. Hopefully you got some value from today's video, traders. Magnify your strengths. For me, it's timings, the pattern of the price action at those timings, at the high and the low. Engulfments and pin hammers, 1 bar stops, 50 pip targets or more. And again, keeping it simple. Staying out of the inside, identifying a bias prior to the session starting, and then going from there. Have a great trading session. Have a great trading week, and may the markets go.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.